Green Rush, Mining the Energy Revolution with Matt Watson.
Hello, this is Green Rush, Mining the Energy Revolution. I'm your host, Matt Watson. Each week we take on the periodical table, we take on another element as it relates to the clean energy transition. This week our discussion is about lithium and the lithium battery metals markets. We have as our special guest, Mr. Christopher Williams from Adamas Intelligence. He's a lithium analyst there. Christopher, welcome to the program.
Great. Thanks for having me, Matt.
Not a problem. So why don't we start off with a discussion about your organization? I just grabbed some materials from your website. It looks like you provide a number of reports, subscription opportunities, and even consulting services. Why don't you give us an outline of your organization, how big it is, and all the different services that you offer?
Certainly, yeah. So Adamas Intelligence is a consulting and advisory service that has been in operation since 2011, covering critical minerals, and we provide a bunch of subscription services, monthly reports, quarterly outlooks that do deep dives into the supply chain dynamics, trade flows, pricing, and doing critical analysis of market developments as we see them. Most of our reports are quite easy to access. It's a monthly subscription, 12 months or longer. So and we also supplement that with a lot of consulting and advisory sort of functions. Historically, most of this has been sort of in the rare earth space. In the last 12 months, I've been sort of pushing the lithium business. And we've just gone live earlier this year with the lithium battery monthly report.
I think it's interesting. You guys are, prominent in the rare earths as well. There's not many that do that. So that's good to hear. Now, what sort of services do you offer? It's just, you've got a number of subscription reports I see, but you also offer some consulting services as well. Why don't you describe some of that?
Yeah, that's right. Yeah. So we have a lot of subscription-based services, monthly reports, quarterly reports, covering sort of end-to-end market sort of developments, looking at pricing, trade flows, analysis of market developments and what it means for sort of supply-demand balances and whatnot. So. And then supplementing that, for sure, we do have a lot of consulting and advisory sort of capabilities that we've had. We're sort of building that out with the lithium space, but predominantly that in the past that's been focused on the rare earth space.
Right. Okay. Now, just real quickly, I want to kind of set the plate here for the lithium demand. If you followed me or you've seen any of my presentations, I tend to frame everything into a base case and a high case situation. Since we're talking about lithium, of course, the only markets we're really going to be impacting are the lithium battery markets, both for EVs and for large-scale energy storage systems. That's where the lithium is used in this mix. I try to highlight, I think some relative extremes. The base case is what I think is doable with mining constraints and the timeline to bring mining online in particular, really gating us in terms of how big we can go. I know in the energy storage market, there's a big discussion we can have on, how big is this market going to get? Is it going to be a couple of 2.2 terawatts at the end of the day, or 4 or 5 terawatts at the end of the day? So there's some plans, some visions for some rather large energy storage. We could talk about that a little bit later. But just to frame, first of all, the powertrain mix, and I did this last week as well, but just to repeat, you can refer to the International Council on Clean Transportation. They have a couple scenarios where they talk about how many of the percentage of the vehicles need to be zero emissions, presumably either a BEV or a fuel cell vehicle. Fuel cell vehicles are negligible volumes, so really this is a BEV discussion. And they show a base case ranging out to about 40% mix by 2050. I think that's reasonable. Of course, if you talk to clean energy advocates, they want to see 100%, but the question becomes, how quickly can you ramp? They show a momentum case closer to 63% by 2050, and then an ambitious case where literally everything gets converted. And again, I've taken those and I've translated those into what I think is a roadmap for the powertrain mixes. I've annotated these charts, and here's my base case on the left, that zero emission case on the right. But I think it's realistic to see a case where BEVs and hybrids and plug-in hybrids end up being roughly an even mix by 2050. Again, many people look at this and they think there's going to be a bigger proportion of EVs. I really challenge that both on market acceptance rates and on the mining. Again, how quickly we can bring mining on board. But when you run the metals demand under those two scenarios, I end up looking at lithium demand forecast, and this is mining forecast, that looks something along these lines. And, an outline where from 2020 to 2050, you need about 74% of your global known reserves to meet this demand. The zero emission case, where there's more of a jagged step up, these are these big transition dates around 2030 and 2035 where zero emission mandates step in, a much steeper slope of demand to get there. So Christopher, what's your take? I mean, is doing a zero emission case by 2050, can we satisfy global demand by 2050 in your opinion?
It's a great question. I mean, policy support for zero emission vehicles has been extremely strong, and we've seen that particularly in the last couple of years or so. Right. I think that's really going to precipitate, what you sort of depicted there in your sort of bullish case. Right. I think business as usual trends that we see with consumer behavior wanting, nice, efficient, modern vehicles will probably support the base case on its own merits. Right. But when you layer on top of that, incentives from various levels of government, I think you're in a world where you're more looking at that bullish outlook there. So those numbers do sort of resonate with me on the bullish side. Right. Our view is that, as we've seen with the policy push recently, that those sorts of growth rates can be seen. But as you say, once you get a little bit too bullish, you're entering into a world where you could become supply constrained, and I think that's a realistic possibility, particularly sort of beyond 2030. Right. Yeah, we sort of have enough reflexivity in the current supply chain to sort of limp our way to around the end of this decade, but I think thereafter it gets a little bit more complicated.
It gets dicey, and it really depends on the price, frankly, right? And what is lithium going to be stable in terms of price? And that was actually the next conversation I wanted to have. Here's a simplistic 10-year history on the mined lithium price without getting into the intermediate pricing and whatnot. Just keep it simple. And yeah, so we've been running between $10,000 to $20,000 a ton. We get to this point where the market's really shot up. We've shot up over $70,000 a ton, even $80,000 a ton briefly in 2022 before it's now come crashing back down at present levels in the neighborhood of 15,000, 0.2, 0.3K. And yeah, I think there's a case to be made, Christopher, for the mining investment. Yeah, it's much more palatable if we were to sustain a $70,000 a ton outlook. But boy, mining investors, they kind of hate these roller coasters, don't they? So,
yeah.
First of all, let's talk, what's your view? How did we gyrate up this fast? I mean, that was just an astonishing climb to climb above $70,000 a ton. I mean, obviously supply and balance drove this, but in your mind, how do we get there?
Yeah, I guess the volatility in lithium prices is really a function of how small the market is, right, and its susceptibility to supply shocks. When a brand new mine comes on, it's dumping 3, 4, 5% into the market almost overnight. Right. And whereas, the demand profile, I think you could agree is probably a bit more of a stable sort of consumer behavior dictated sort of trend there. So yeah, it's volatility is the name of the game in the lithium market until it reaches sort of like a steady state maturity, which, could be, several decades away, really. Right.
And to your point, what's the outlook beyond 2030? To me, it's going to be simply the price. Where are we going to be, and what's the stability in that price outlook? And that's obviously what's going to drive that mining investment wheel to turn over, if you will, and drive more demand.
Yeah, and until 2030, I think we're in a world where, the market seems to be quite comfortable and quite balanced at the minute. It is on a knife edge, so it's susceptible to sort of any upside or downside surprises in
Right.
supply and demand. But it's really a sweet spot for auto and cell companies to really take advantage of the low cost base provided
Right.
from the cheap battery metal prices that we're seeing at the moment. So this is really important in our view to push demand of electric vehicles, across the chasm, as they say, in developing markets. We're seeing a lot of uncertainty in the news right now about whether EVs are going to be a thing in
Right.
the US or Europe, but with cheap battery metals, we can really push across that chasm and push demand further.
So we've been talking about the lithium by mining by the country, the origin. So this is where it's being extracted. Now let's shift gears and let's talk about known USGS known reserves. And again, let me quickly define for the audience USGS, how they define known reserves. These are lithium sites that have been well mapped out. All your drill holes and your assays and your understanding of the materials underground are complete. You have an extraction plan, a processing plan. You have access to power, access to water, all the things that you need to do to process these minerals, and that these are economically viable sites at today's prices. And when you look at the mix of known reserves, we see there's been a big growth in the known reserves. So developing these reserves is an important part of the exploration and this mining process. But you look and you see Chile, Bolivia, and buried in this purple, which is others, is some Argentina volumes. And these are all part of what's known as the Lithium Triangle in South America. These are all at some 12,000 foot plus elevation. These are salt flats or salars at very high altitude. And, these are brines. These are, and today, the problem, as I understand it, with brines is just the sheer water requirements. Historically, you need some 2.2 million liters of water, fresh water, for every 1 ton of lithium extracted. And that really becomes a constraint in these arid regions. What are we going to do about this? And so I think water is probably the biggest ESG concern within the lithium metal set. Now, I happen to be friends with a guy, the CEO of IBC Advanced Technologies, who's got a large-scale DLE trial going on. I know there's E3 Metals, and I think two or three others, a total of 4 or 5 people that are doing large-scale trials. So, Christopher, is DLE an established process today in the lithium market, or is it just now getting there?
Great question. DLE sourced lithium units account for about 10% of today's supply.
Right.
Now, importantly, those are sort of legacy DLE operations,
Right.
which are mostly tapping into, potash operation tail brines,
Right.
in China, and there's the Livent or ex Livent operation there in Argentina, which is sort of doing like a bit of a hybrid DLE approach. But in terms of most of the technology that's involved in these DLE operations, we're talking about an absorption type DLE, which is absolutely quite a mature technology platform, and most efforts into R&D in this space are sort of using that technology platform as the basis for their engineering studies. But
Right.
yeah, as you say, there's lots of companies looking at this and applying different technology avenues into the DLE space. It is quite a blanket term, but yeah, there's many different ways to approach this.
No, and I think you almost have to put an asterisk on the DLE. It's a DLE with low water consumption, minimal water consumption, and recycled water, things that you could do to lower your water requirements. And so that's what I really try to keep an eye out for. When is this market really going to emerge and really take off? Because to me, Chris, this can really open up the market, right? These deposits, I think, are huge. And I think instead of having 40 or 50 smaller lithium sites, you can have one really significant site and, larger processing centers that can not only help you with the economics, but just help you with the scale and scalability of growing this post 2030, like we're talking about, where we have questions on, can the lithium market keep up with demand? And it's not a question of lithium in the Earth's crust. It's not a question of, the abundance, if you will, in the crust. There's plenty of lithium. It's just how many of these sites are developed enough from a lithium or from a mining perspective to get the mining operations up and moving is really the challenge. Would you agree?
Yeah, I would agree. I'd say, beyond 2030, there's a real appetite for DLE sourced units, and unlocking those high altitude brines, as you say. But it will come at a cost. So economics will really drive the feasibility and also the strategic interests involved. The exploitation of the Uyuni Salar in Bolivia, for example, that's attracted Russian investment. Just as an example, and then also, in the US, you're starting to see a lot of big oil players sort of entering the market, and sort of unfortunately, you need these sorts of companies with huge balance sheets and strategic interests to fund the DLE operations, because they're proving to be quite expensive.
Yeah, and that's where I was going to take you next. Is talk to me about cost. What do you know about your all-in sustaining cost of these sorts of operations versus the spodumene hard rock in Western Australia? Australia is winning the cost war today, right?
Yeah, I'd say DLE is proving to be quite competitive on the cost curve itself. It's sort of somewhere in the middle of the cost curve as the cost curve sits today. But I think where it trips over itself is in the capital intensity to get the projects into production.
Right.
So therefore that drives up your incentive prices required to get like 20% internal rate of return for the projects, for example. So but as you say, the cost basis on it, once the projects are up and running, that brines in general are very competitive, and DLE certainly fits into that bucket, particularly if you include energy credits in the case of geothermal DLE operations. We see those as being quite attractive.
Understood. The other point in terms of, I think, scaling concern, I talk about this all the time in my presentations. Chile today, you look at their national power grid, over 30% of their grid supports mining operations today. And I tell people, you haven't seen anything with mining yet from Chile. When you talk about, future copper demand and lithium demands, oh my gosh, what is Chile going to look like by 2050? How big can they go from a mining perspective? So they're going to be challenged on the energy front as well, I think. And of course, the cost of those energy sources are going to play a role in this cost conversation as well. Finally, the last point, again, just the water stress, the lithium, whether you're talking Western Australia, whether you're talking this, lithium triangle in South America, both are in very arid regions. Waters are concerned in both locales. Something just to keep an eye on. Would you agree?
Yeah, absolutely. Water is a key issue for these DLE projects, particularly in the Andes. As you say, water stress is difficult for the broader population, let alone like the extractive industries there. So next generation DLE can really target that particular metric, high recycling rates and re-injection back into the salar. These are the sorts of technologies that that they're looking at. But frankly, they're going to be required in order to get the approvals needed to bring on new operations in those ecologically sensitive regions.
Right. And maybe I should have pulled a diagram of this DLE up front, but one of the benefits is you can go right from the the lithium brines directly to you bypass the intermediates, the mined lithium, and you go right to a lithium carbonate as the output. So there's some simplicity in the flow of these DLEs. And again, back to the cost. This, like you said, puts us still in the middle of the pack in terms of extraction cost and all-in sustaining cost, if you will, from a mining perspective. So it helps, but it doesn't seem to help enough, if you will, the lower cost profoundly, which is unfortunate.
Absolutely.
If you have any comments there.
Yeah. There's a lot of characteristics of DLE that are immediately appealing, but I guess the devil's really in the detail. Folks have been looking at this for quite a while. The next generation DLE is still sort of yet to be proven commercially. There's a lot happening in that space. This year we've got Aramat's facility in Argentina coming online. It'll be good to keep a close eye on that. And all the various projects that Sunres and out of China are involved with, they've only just started applying their technology to raw brines as opposed to potash tail brines. So yeah, lots happening. One space that there hasn't been a great deal of work on is reinjection. There's really not much known about the dynamics of reinjection. From a hydrogeological perspective, if it starts messing around with like water tables and whatnot, it could sort of change the environmental impact of the project. So lots of work to be done in that space.
Okay. I showed this chart last week. I'll bring it up again. So, people think lithium ion chemistries are all the same. No, they're not. Here's some popular flavors that are out there, and I have it color-coded with some of the price tags of cobalt in the orangish red here. The blue is the nickel at $19,000 a ton and so forth. And then lithium here in this gold tone at the bottom. Lithium's present in all these lithium-ion batteries. But the big point I wanted to get into, I was want to talk about recycle and some of your modeling and outlooks for recycle. LFP, I know, has a recyclability concern, and it's not that you can't recycle and get out lithium. You can extract the $15,000 a ton lithium. But since there's no nickel and cobalt in this LFP design, it really leaves recyclers at a cost disadvantage. Economically, these are all very easy to recycle on the right with the cobalt and the nickel containing varieties. But the LFP in particular is underwater economically from a recycle perspective. How much underwater? Well, in the US, you have to pay anywhere from $1 to $2 a pound to get these LFP batteries fully recycled. And so I have a big question. Well, what is the mix then of LFP going to be, and how is this going to impact recycle as a mix? Here's our chemistry mix chart from the IEA with the low nickel and high nickel varieties in the blue tones, and the green tone is the LFP. And you can see China, of course, they have some huge population. Over 2/3 of their mix is this LFP. In Europe and the USA, it's a smaller, although growing percentage. And just given China's dominance in, the EV and vehicle market, that weights the overall global average to look like this, where about 40% today is LFP. But again, economically underwater, is this going to impact our recyclability of lithium going forward?
I think it absolutely will. Recyclability of a cathode is, it's like a nice to have benefit for the cell manufacturer. They're mostly, their business model is to sell cells and EVs, right? So it's sort of like something that they consider after the fact. Recyclers, as you say, the economics of LFP recycling is challenging. Our conversations with recyclers sort of point to the fact that there's a lot of subsidization required in order to actually recycle those batteries.
Right.
And then there's questions as to the sustainability of that subsidization. It absolutely is one of the key benefits of nickel-based batteries. But the problem is sort of the economics. Who sees the incentive to put those units in the marketplace? Yeah.
I just want to say, from a policy perspective too, the EU is unique in this regard. They have policies where the auto OEMs, the EV OEMs, are responsible for sponsoring that recycle fee, if you will. So the recyclers get paid for the recycle treatment charges, if you will. But that's only in the EU. The US does not have any policies like that, nor does China. And frankly, I get very worried how many of these Chinese LFPs are going to landfill. I happen to work in this recycle space with these folks, and I could tell you in China, there's a number of these LFPs that are going to landfill. There's no doubt about it. And it's just cheaper to start with fresh material than to bother recycling. And so it's a concern that I think we all need to be aware of. And certainly in our supply demand modeling, how much of this material are we going to catch for a second loop? The nickel and cobalt containing variety, I'm not worried about those. The economics are there. Those will get returned without any question. It's just the LFP or the LMFP variety that pose this dilemma. So perhaps it's something to keep an eye on. And then, Christopher, I'll try to wrap us here with just a quick, and I know this is a convoluted chart, but you look at the roadmap for battery technologies and battery chemistries. And we've got these NCAs and NCM, the nickel and cobalt varieties. Here's our LFPs, and now there's an emergence of about 2% of the market share is a sodium ion. This will mostly go into the storage space. But it's these components, the sodium ions, same recyclability problem. You're throwing your recycled, value proposition out the door when you do that. The good news in my mind is, well, really, what are the next big design turns? And I'm a big fan of trying to pull in lithium sulfur as the next generation design. Beyond that, there's lithium air. There's all sorts of problems with the air and the catalyst materials getting poisoned. But lithium sulfur is a technology that is already starting to demonstrate in the range of over 400 watt hours per kilogram, and a gravimetric energy density metric. So it's already about double the energy density of today's designs in some of these lead lithium sulfur designs. Now, there's a number of folks, 3 or 4 folks, are trying to commercialize this and get some optimized designs into into operation. They'll start at somewhere around 500 watt hours per kilogram on energy density by the time they go mainstream. We don't see this yet, but I really have a lot of hope that this lithium sulfur design can help alleviate some of the aggregate material demands, right? We can cut our demands in half with having double the energy density. And I just think this is an important part of this beyond 2030. How do we get there? Lithium sulfur, in my mind, is really one of the best prospects. And I think it takes away some of the risks too. Cobalt and nickel miners, they have the added risk of, well, is cobalt and nickel going to be in the mix and for how much longer? In lithium sulfur, you're assured the lithium is going to be a stable component, for decades to come. And so I think there's some stability in that outlook for the miners from a lithium perspective. Comments from you, Christopher?
Yeah, the next generation, solid state batteries and lithium sulfur and lithium air and all these sorts of technologies, they're certainly quite exciting. I guess one needs to take a step back and sort of assess, like, what markets are they especially going to be targeting? And I think, in our view, it's really the last adopters in the EV, excitement. You're talking about, rural drivers, folks that, are sort of skeptical of lithium ion batteries platforms as they, allow them to drive, just in the cities and short distances and whatnot. I think it's really just addressing those key markets. So right. It's, and that balances nicely with, how long it's going to take to actually get those technologies up and running.
Right.
So yeah, you're really talking about, a 2030, 2035 sort of story with a lot of those technologies. But yeah, it's fun to certainly muse about, the implications of these technologies.
Right. All right. So finally, let's wrap up with the conversation back to the price. What's your outlook? Where do we head from here, from the 15,000 and change that we're at today per ton? How do you see this market respond?
Yeah, well, as I said earlier on, I see us on a knife's edge in terms of the market structure. Supply and demand is meeting itself quite neatly at the minute, in our view. We see this sort of lasting for, it could be up to, like, say, 2 years, which is a typical cyclical downturn in lithium prices. Tend to be around that length of time. We could see ebbs and flows through that time. We track that in our monthly EV battery lithium monthly report. Right. We sort of have a quarterly outlook. We do see sort of a cyclical sort of behavior throughout the year. So, we put out a note talking about how we see, there could be some buying pressure resume towards the back half of this year. But we're certainly not expecting any, strong run-ups in lithium prices outside of, an external exogenous shock on the supply or demand side. So, but yeah, after, this cyclical low that we're sort of entering now, we sort of see, a constructive view from, say, 2028 onwards. And a lot of our modeling points to, incentive prices for projects required up until that point being around the 20,000 mark lithium carbonate equivalent. Thereafter, I mean, sky's really the limit. We'll wait and see what happens with how brutal the current downturn is. If it's quite bad, it's going to make the upshot even higher in the future, right? So we'll see, but we're certainly quite constructive towards the later back half of this decade we're in. So
fantastic. Well, Christopher, I can't thank you enough. Pretty wide ranging. We've covered a lot of topics here quickly. Any final thoughts from your side on anything you'd like to share?
No, yeah. I mean, it's been a fun chat. Certainly lots happening in the market. We've sort of come out of a bit of a lull in consumer sentiment towards EV, particularly in North America. But in our view, we're seeing strong demand in this year and next. But we're also seeing quite a lot of supply that's also come through as a result of the last bull market that we saw. So lots to keep an eye on, and we look forward to seeing what happens in the future. So,
well, fantastic. Thank you so much for your time. I really greatly appreciate it. Next week, we'll be taking on another element from the periodical table. We're going to take on nickel. We'll have the famed Mr. Martin Vidra, who plays a number of roles in the nickel industry. So join us next week when we talk about nickel. Again, this is Green Rush, Mining the Energy Revolution. I'm your host, Matt Watson. Until next time, thank you, everybody. Take care.
Green Rush, Mining the Energy Revolution with Matt Watson.